with us. If you're unfamiliar with the Force One organization, our mission is to bring experts and entrepreneurs from around the world to share information that raise capital consciousness in our community. And for the past 16 years, we have a signature event called the Father and Son Red Tie Luncheon, where we bring together fathers and sons, grandfathers and grandsons, mentors and mentees for the sole purpose of connection. A couple of activities that we have, one is breaking of the bread, when we gather together men in a safe atmosphere. We allow them to share their hurt, their pain, and their successes so that in collaboration and community, we can inspire each other, encourage each other to pursue whatever God endeavor that has been placed on their heart. And with the fathers and sons, we have a couple of activities that allow them to share a deeper bond with each other that goes beyond parenting. So in this segment, Dr. Frank, I know that um, you're a little bit under the weather right now. So we just pray for your healing and restoration and protection as you continue to heal. Uh, Patrick, man, we're thank you for joining us again, and to the Force of One broadcast. Thank you for your support as well as your contributions that you have so lovingly, kindly offered and throughout the years as being our guest speaker, community advocate, and all those great things. So, Patrick, just reintroduce yourself to people that may or may not have known you for the first time, and as we segue into the message about the five homes.
Thank you, thank you, thank you. I just want to say thank you to Force of One. Thank you, Fred. Thank you, Dr. Frank Marshall, aka Uncle Frank. Thank you so much for having me on tonight. For those of you who don't know me, my name is Patrick Remy, or some people know me as Coach Remy Ram. Coach Remy Ram stands for Raising Extraordinary Men. And so I want to thank Uncle Frank once again because he encouraged me to get my life coaching certification years ago. I went ahead and did that, and it was just life changing. It's something that I really wanted to do, something to do to change people's lives, especially the lives of young men. I don't discriminate, but that's my focus group is the young men, the next generation. So that's a little bit about myself. I'm also going to have another person with me who's going to be assisting me. He is a business partner of mine. His name is Blue. He's a trader. He trades stocks and currencies. And I want to say something to him real quick.
Absolutely. How's it going, everybody? It's a pleasure to be on. I know I met Unc. We actually met at his office a few months back. So it was a pleasure meeting him. Sad, unfortunately, he's a little bit under the weather. But I'm one of Pat's business partners here. I day trade and I also work in tech. But mainly, my objective right now is to educate families on having a very strong and very strong financial foundation. And that's what we do. We basically educate families on that realm to make sure when it comes to our community that we have a lot of information so the generations to come can benefit from what we've done now for them. So that's just a little bit about myself. Outside of that, me and Pat are here working. We're actually here at the office now, just
Yeah.
finishing up a couple meetings, and we're happy to have this opportunity just to come on here and just bless and give some information to the community.
That's good. That's good. Well, it's going to be a dynamic duo tonight,
Yes.
and looking forward to the actual conversation. Well, first of all, you said a lot there, so let's break it down for the people because we're in a time right now that with the war is going on in different countries and different lands, and you have globally the supply chain management has been disrupted either through technology and through other varies of a changing of guards and power struggle of who is going to be the country that's on top, who is going to be the country that's dominant, who's going to be the nation that's dominant, that's on top, that is controlling these different assets of land, water, and other various resources that can be traded globally around the world. So, what I say all that to me is that you, as an individual, have to consider of what assets that you're building in both in your overall portfolio. The portfolio consists of, in simple terms, of assets and liabilities. And an asset is simply is something that is it goes beyond passive. It's something that builds, something that grows, something that accumulates while you sleep 24/7. Or it's something like in trade, for example. Trading is a skill that everyone needs, everyone has, and everyone must participate in. And you may not be a day trader. You may not be a a swing trader. You may not be a stock trader or options or elite trader or all these other types of trader. But you are a trade. You trade every day. You either trade your time or you trade your your money or you trade some kind of form of trade. Trade could be a transactional trade or trade could be something that's relational. But you trade every day, every moment that you wake up, every second that you speak. We're trading right now as we're doing this. We're trading knowledge, we're trading information, we're trading things that will place something in you that in we pray that in that moment it will grow and it will sprout. It will allow you to expand or become aware of who you are and what you can bring in the marketplace. So I want to start off with this first. Let's start off with Patrick, then we'll swing over and say your name one more time, brother.
Blue like the color. Blue like the color.
Blue. Okay. I got a delay on my end, so I apologize for that. So Patrick, discuss your topic. Let's start off with what's the 5 homes,
Well,
and we'll swing it on to Blue and let him tag in on that.
before I go any further, I want to talk about how I even got into this thing. Is that okay with you?
Sure. Go ahead.
Yeah. So basically, as a life coach, I started dealing with families, especially single moms, raising sons, and I was looking for something through working with them. I was really looking for something to help them out economically, also. And so I was invited to this presentation. I went to the presentation and I loved everything I saw because they were teaching financial literacy, and something just sparked in my spirit and said, you know what, this is exactly what I've been missing. Now, prior to, I work with youth, young adults for about 18 years now. No, I'm sorry, 17 years. About 17 years now. And so the
Long
thing
time.
was,
Long
like,
time.
I never really wanted to work with that population. I'm just be honest with you. I didn't want to work with that population because I wanted just to make money. And so what happened was, God started dealing with me and started calling me to do that. And so I did. And I took a big pay cut to do that. But long story short, I started working with a lot of people as a life coach, and I saw the need for people to be able to learn about more about finances, financial literacy, which we don't have that in our community right now. One of our issues right now is 50% of Americans do not know how they will retire. Over 50% of Americans do not know how they will retire. You know, you mentioned earlier that the market is going crazy. Every time you hear some news, some we hear news every single day, but every time you hear some news, then it's going to affect the market. Every time the president opens his mouth, it's going to affect the market, whether it goes up or whether it goes down. It's going to affect you. Affect people. A lot of people through the news that's coming out. And so one of the things we could do, and a lot of people don't know about, is annuities. Annuities can protect people from market losses, guaranteed to protect people against market losses. 401ks don't do that for you. IRAs don't do that for you. You know why? Because those assets are traded in the market, S&P 500. And so when you're in that realm, you have the chance to make great gains, but you also have the chances to lose money also. As you know, I don't know if anybody ever traded currencies or especially cryptocurrency. Cryptocurrency is really volatile. So I've made some pretty decent money trading cryptocurrency, but however, I had some very quick losses also. So it's very volatile. But when you talk about mutual funds, 401ks, IRAs, those things seem to be pretty stable over the history of time. However, there are certain times in certain economies where there is people are experiencing losses. I'm not sure of everyone on this program right now what kind of products they have. A lot of people sign up through their employer. Some people go through financial advisors, but those things are all good products. However, there's no guarantee that you won't have any losses, and annuities can do that for you. I'm not going to go through all five homes of money because I'm not certified to talk about all of them, but I'm just going to just mention a couple of things. Next thing I want to say is taxes. Taxes are eating people alive. If you look at United States, we pay so much in taxes. I mean, we have payroll taxes, we have federal taxes, we have FICA, we have property tax, we got luxury tax, we got gas taxes. We have, if you add up how much we pay a year in taxes, it's probably closer to 50% than 30%. Okay, so we're getting losses in taxes. And one of the things my partner is going to show you is about how to put away money and not have to pay Uncle Sam double and triple times. All right. Next thing is inflation is another problem. We have the cost of living is sharply going up. The inflation is growing at a faster rate than wages are going up. I was just at someone's house yesterday, and she was telling me this was just a normal little house. She was telling me that her landlord was coming to inspect the house and was trying to raise the rent. However, everybody in the neighborhood was paying like $3,800 for rent, and these are not anything special. It's just a normal little house. So I was thinking, inflation is really affecting a lot of people, and so we have to find out ways to put in tax-free income, or have keys to putting your money in places where taxes can't eat it up. And so I think that's very important. And these are some of the things that we've learned through our company. We have our company Ignite Wealth Management, also PHP. So I'm going to go ahead and turn it over to Blue and let him talk a little bit further. Blue is actually helping me out. He's been training me in certain areas. He's very knowledgeable, and he's been doing this longer than me, so I'm going to let him talk a little bit more about it. Go ahead, Blue.
Awesome. Well, appreciate the floor. Pat pretty much went over a good majority of the kind of information on what we do, especially with annuities. We tend to everybody within this market, either that you're a young 2-week-old baby from an 80-year-old, whomever, and everybody in between. There's something to help you mitigate any problems within this current market. Because what we can't control is what the economy does, but we can control what we do with our money. And our goal is to educate, as I mentioned before, on ways to help not take any losses, if that, right? Because having a IRA and variable accounts per se are great because you can make a lot of great gains. But obviously, if you're getting ready to retire this year, you don't want that money sitting in a variable account because You never know. We can have something that happened like COVID, and you don't have those years to get those gains back. So essentially, we deal with 20, 30 plus carriers from your national life groups, from your AGI, from your nationwide, to name a few. Each and every one of those carriers have a product that caters to specific people, and we help we're pretty much the liaison when it comes to finding the best product financially for anybody. Um, and one thing that we do for sure is that those services are free. That's something that we do. It's not something that you come on. We do that just to educate the community. We work with the carriers; they're the one that compensate us. So whatever we do under the tree for our community is always free.
That's good. That's good. Because I can recall, you correct me, that annuities, um, basic fundamentals of annuity is that when you put the money away, when you invest, and when you invest money into a particular fund, is that this fund is a multitude of other funds in there. For example, uh, there is there probably one of the funds probably connected to the S&P 500 that has multiple companies within that particular fund. And usually now, the stock has been up and down. The lowest and the minimal of it is usually 8%. And depending on what registered advisor or financial advisor that puts you in that particular fund, again, the standard is really either 12 to 20%, but it all depends on the fund. And it could be a great asset. That's why I say it depends. It varies. It's not a guarantee. It just depends on what the fund, and also depends on your risk management of the particular individual. So if you're the high risk, low risk, or you're a mid risk type person, just to keep it in simple terms, and whatever your risk tolerance is that you have a financial strategy and structure in a particular fund that's suitable for your end goal, whatever the end goal is, your financial goal, based on your retirement. And so when you have this annuity, it gives you a bridge of an asset. Consider it as a hedge of protection when you retire. And of course, when those funds, they are, you can allocate those funds as they're taxed. They're not taxed until the funds are withdrawn, meaning when it becomes income. And so when you can, it's a lot of strategies you can use against it. Sometimes, depending on the fund, now all companies do this. Sometimes on the fund, you can borrow against it, but not all companies do that. It just depends on your structure of the actual allocation of that particular fund. And so it could be a good tax strategy. It could be a good wealth strategy for you. I want to dive in a little bit deeper. Also, I know PHP and other things, they also have this insurance arm to it too. So let's dive in a little bit about on the financial literacy side of breaking down permanent and term insurance, or in other language, it'll be whole life insurance or term insurance. I know y'all probably deal more in term, but let's break that down as one of a financial, let's say a financial strategy for an individual that is considering that option, and how they can help their families with that particular option.
Absolutely, that's a great segue. So with us, PHP is the vendor that we use. Integrity Market is the umbrella that is under
Umbrella.
PHP.
Cool.
Yeah. So with the term and perm, whole life. I'm glad you mentioned whole life. Whole life is one of the products that originated, I think, early in the '80s or whatnot,
Mhm.
um, and which is a permanent product, which is great. It was very popular back then because a lot of people had it. They used it for real estate, which you can borrow from it. You don't have, I mean, you can take a loan from it, pay it back with interest, or you can keep that and it will be removed from the face value of the amount that you have. Nowadays, we have something called an index universal life, which is also
IUL.
permanent. Yeah, an
Yes.
IUL. Now we deal with multiple products from term and perm, depending on the person. Term products are amazing. They're real good for people that are just bought a home, wanted to clear some debt,
Mm-hmm.
um, or just have something for them that's cheap if something was to happen to them down the road, right? So it's a great product for that. And it's another great way to add to your wealth because obviously, one thing I like to tap on is something called living benefits. A lot of the products that we use have living benefits, and it's not talked about a lot, but it gives you the ability to use your insurance when you were living if you have any critical illnesses,
Yep.
terminal illnesses, stuff like that. So it's very important I mention that because life insurance is not only used to when you expire. Now, to touch on the index universal life portion of insurance, it's a permanent policy that has two buckets. It has your cash flow bucket for living benefits, and it has another bucket where that pays for the expenses. The reason why it's a great foundation outside of whole life, because whole life it accumulates cash, but the $100 that you're putting into it doesn't compound. The IUL compounds because the money that's in that index universal life account is mirrored in the stock market and not invested. That's why they can guarantee that you will not lose a dollar because it's not invested. So it's just another great strategy for people to know when you have these permanent products for life insurance. It has that component where you can actually use it to build wealth. I didn't know about this until 2 years ago. I'm like, well, I wish I would have known this in my 20s because
Yeah.
I could have, a couple dollars to maybe start a business or, take some out, maybe put down on another house or something like that. But our community don't know about stuff like that, so we're left behind in the dust when you're late 30s or 40s and like you're starting your IUL where you could have started when you were in your early 20s. And then, as I mentioned before, your kid can be 2 weeks old and you can get them an IUL, even though if it's life insurance, it's a saving component on it as well. So by the time your kid is 18 years old, you've been putting $120 into an account for them for the past 18 years. They may end up having $60,000 to go off to college, buy a new car, you know, and it's just a great way at a very low cost to build because again, it's mirrored in the market, not invested. So the companies that use that money that's mirrored, you don't get the full percentage of the 6 to 12% per year that they usually guarantee, but they give you enough to compound because they're using your money to what, use options and make money for them, and then they give you a kickback. So the difference with that, with the permanent, obviously you have it for the rest of your life, and then term outside of things is that you can get it for 10, 15, 20, 25, and 30 years, right? And obviously it expires, but one of the cool things about the term products that we have is called a convertible period where for X amount of years, depending on how much. Now the pricing may depend on your age at that time when it's converted, but it gives you an opportunity to get something real cheap. You start making some cash, you can afford a permanent policy. Why not convert it to a permanent policy now to where you get the added benefit of building cash value that you can then use, just like bank, because that's what banks do. The money that you're putting into a bank account, they're putting them in life insurance, you know? So it's just the little things that we're starting to learn, and we want to educate our community on ways to start building wealth because at the end of the day, when you start building wealth now, it's not about you. I'm thinking about 3 to 4 generations down the road. So hopefully that kind of makes sense with the term and perm. I know I kind of went on a tangent, but I just want to give the whole picture.
You wasn't on a tangent. Yeah, you was spot on because statistically, what statistically that's happens in the second to third generation, wealth has disappeared. The reason for that it's a lot, is many reasons, but the core reasons is in the second generation is it's like a discovery, and there is if it's not a structure in place for as money management, knowledge archive management, meaning that you have your knowledge archive and asset that is organized and that is taught when they're children and brought up, and so it becomes a mismanagement of the actual funds because they haven't really learned how to manage the funds themselves. And so when the third generation comes in, the money is actually gone. And this can be prevented in one or two ways. In terms of what Blue was saying about whole life, that is true, that they only give you two options. Either you're going to take the cash or you're going to take the death policy. And you can't take both. So whatever is greater or whatever you decide in that moment, that's when financial literacy comes into play, because you have to make that split decision. It's up to you. No one can advise you on it. They just lay it out there and say, what do you want to decide? The strategy behind that, you can go and just look up Rockefellers. They actually took the YouTube down, but Rockefellers actually built they sustained their wealth through whole life policies in that aspect. So to align with the IUL was the Index Universal Life Policy. That particular policy is really good because it's tied into S&P 500 and other asset class stocks, and they guarantee you. Normally, I want to use the term guarantee, but they have a 4% and 6% growth. They call it growth fund or growth index fund that's in there. So it actually gives a return on your money. And there's a life, just like what Blue said, there's a life insurance package that's inside of that too as well. And that's an either or too. They don't give you both. It's kind of like, okay, weigh the options of which one benefits you. But it's a good strategy in there too, like what Blue said, because you can use that to borrow against it at a lower interest rate than what's outside. If you had to borrow for a home or a car, you could pay your policy back, and becomes, as you have seen in the internet, a private bank. And that's what they mean by private bank. Your family could become a private bank. And a strategy that I believe that African Americans can use, and maybe it could be universal, I don't know, is that normally if you have children, you get a tax credit, right? So here's the tax strategy. So normally that tax credit is between $1,500 and $2,000 per child. If you take $500 out of that, or you take $800 or whatever that annual amount of you setting up your child on that IUL, then you just pay it off for the whole year. Then you automatically, you put that aside. In 18 years, that child becomes a millionaire. Just do the math. He already said $120, right? That's $1,200 some odd dollars. They say round it up, $1,400 a year. You take that, what you already gonna get from the government, and you pay that for 18 years of the child's life. God bless that the child will live and be prosperous and whole and complete. But the government actually made your child a millionaire. You take that child being a millionaire, right? And by the time they're 18, then you set it up into a trust fund. You set it up into a trust fund. You take the allocated assets that you already have, you put it aside, you structure it in a LLC, you cover it and protect it in a trust fund. Then what you can do is that when you want to get that child a car, you can get that child a car and have that child go out there and go to school, if that's decision to go to school, or create a business that they have worked on for a long time and pay that actual trust fund back. Now you become a private bank in the family. And guess what? You only use 10 to maybe 5 to 10% of the money that's there, and you just let it grow and you keep adding on to it. And it inspires them because now they actually learn how to trade. They learn how to not mismanage the money, and they can see how actually money works for them, and they can go and teach other generations to do themselves. So that's just a free strategy tip for y'all. And that's it's also 5 tax strategies with that too as well. You have the solo 4K, you have the other things that goes along with that under the structure of a corporation. And so I want to get to that too as well. Patrick, is that when you thought about how does this financial literacy piece that you have learned and what you were involved into aligns with the life coaching aspect of when you're listening and actively helping your clients achieve their goals.
So basically, a lot of people that I coached um, were asking questions about finances because that's a big issue for them. Um,
What's some of the pain points? One or two pain points you could share with us.
I would say one of the pain points for a lot of the people that I've coached was they don't have the money to send their kids to college, or they don't have money to invest in things they want to invest in. A lot of people are just living paycheck to paycheck, and they have little savings at all, if any savings at all. And so it really affects you when you are, especially a single parent raising a family. It really affects you because you're very limited to what you can do. And so, just along, if we just tackle how to protect our money, our income from taxes, is big time. But a lot of people just don't have the knowledge. And then life insurance is also like it's like the foundation, if you would say. The foundation of everything is life insurance. So I think a lot of people in our community, they look at life insurance as something they don't really want to talk about, something they really want to think about. And a lot of people, when they think about life insurance, they're thinking about burial insurance. We're
Yeah.
not talking about burial insurance. We're talking about life insurance. A lot of people don't have living benefits. So
Mhm.
that's the means. Let's say you have life insurance and something happens to you, get fall sick, or you have an accident or whatever, and you're not able to perform and work for a period of time. You can actually have a payout to you so that you can pay your hospital bill, so that you can survive, so you can support your family. And a
Yeah, it's
lot
a
of people don't.
critical illness
Yes,
payout. Yeah.
yes, a lot of people don't think about it that way. They're just thinking about, oh, I've heard people say this, oh, when I die, I'm just gonna leave money to other people. Oh, I'm not interested. No, that's being selfish. Number one, the Bible says a good man leaves an inheritance to his children's children. So if you're able to leave an inheritance to your children's children, you can do that through life insurance. You don't have to be a multimillionaire. You can basically leave money in a trust for your children and your grandchildren, so that they don't have to start all over again like the previous generation. So life insurance is more than just um, how I'm going to bury you, and that's also a thing that's kind of selfish. Also, if you're parent and you don't have life insurance and something were to happen to you, I've heard stories over and over again, a lot of different ways about how people are having to struggle to bury their parents. There's a fact, a person I talked to just yesterday. Her dad was gone 2 months ago, and they're still trying to work out how they're going to pay for everything.
Yeah.
Think about it.
Yeah.
Think about it. Your dad passed 2 months ago, and he didn't have a life insurance, and people are trying to figure out how we're going to bury you, how we're going to pay for expenses, final expenses. It's terrible. That's the minimum you can do, is take care of the final expenses. But the whole thing game about life insurance is a lot of people in different communities have been using it for a long time to create generational wealth, to create a legacy. And so I think that's one of the main things people need to know, is that. And also, it really doesn't matter how much money you make if you can't put any money away. I think that's a very important thing. Also, putting your money away and putting it into a vehicle to where you could pull money out and bless your family. That's big time for me. So that's just a couple things that I wanted to get out to people I coach.
Yeah. Um, that was actually key what you said. Patrick, and I'm just my mind is racing right now. So I think there's a lot of times that the conversation about transitioning, or let's say the conversation about legacy, is not progressive in certain families. Whether you black or white, Asian, Greek, whatever, it doesn't matter. Um, well, I say particularly in the black family, and I pull that back, is when you, like, for example, um, they call Lincoln Heritage. They do financial expenses, and they can actually alleviate a lot of the burial expenses, actually taking care of everything for the family, as long as they fill out the paperwork as required. And um, another policy will be like Mutual Omaha. Mutual Omaha has a final expense policy for the elders too as well, that can alleviate starting with a minimum of $10,000 really, and they can alleviate a lot of the stresses of um, trying to figure out that situation, which is a lot. It's a lot. It's more than just burying somebody. It's a lot. I mean, you're dealing with family that you haven't even talked before. People just come out the woodworks, man, and they had their hands out more than they had their hands extended, and it gets ugly. And so, if you don't learn anything from what these gentlemen are saying right now, is that the core of what they're saying is just get your assets together, get your assets together, and be mindful that um, you're going to pay taxes. Everyone will, in some form or fashion. That your day will come, and just making sure that you have some sort of legacy plan behind that. Blue, I want to switch to you. What gave you the heart to start trading in the marketplace, and how has that benefited your asset portfolio, and as well as change your behavior and how you see the market, and how you see life?
Yeah, I was always a person to buy like your Nikes, your Apples, your Microsoft. And when I found out that you can be part owner or own a piece of the company, I was like, that's interesting. How do you do that? So when I went down the rabbit hole, invested in some communities and educated myself, invested in communities so I can get that information. I found that, within the stock market at a specific price, once you buy a stock, now you can vote. I'm like, that's pretty cool. So, and then I went, which was long term investing and trading. So I was like doing some digging, and I found that you can actually trade these companies as well and make money when the market goes up and make money when the market comes down. So went down a rabbit hole, did some educating, self educating, and I went as far as to get myself a mentor to teach me, who now himself he's a hedge funds manager. You can't even find him on social media. So it was a privilege to be able to learn from somebody in that stature to see how like the market works. When you understand how the market works from reading charts and understanding candles and then understanding what the companies do and how they operate, you can kind of see things happen before it actually happens, if that makes sense, right? You can understand, okay, for example, I think last week the market spiked up, right? You have little variables like that because of Trump speaking on Twitter that can move the market. So the
Uh huh.
market is manipulated in a way. So you know that, okay, um, no matter what, there's always going to be something in the market that's going to make it move. But no matter how that goes, if there's something that catastrophic that's bound to happen, when you understand how to read the market and read the charts, you can see it coming before it happens. So it made me more confident being in the financial world and understand how the economy works when you're educating yourself on these companies and how the market works. Because even with crypto, everything is simplified to data. When you
Yep.
become a person that trades, you basically become a pretty much a data analyst because all you're doing is reading data, and the data is in the form of candles, which are on a chart, which historically go up and down. But these patterns that go up and down tend
Mhm.
to repeat themselves. So, I don't have any kids yet, but by the time my kid's able to speak, he or she will be learning how to read a chart because even if it's a company that, Disney, learn how to read a Disney chart. If it's going to be on discount at a certain around price, you can set alerts or you can wait or just kind of analyze when it's going to get to that location so you can buy more into that company to be part owner. So it's just a great skill, like, Fred, how you were mentioning before. It's a skill set that every person should know how to read and invest on the market because no matter what, I feel like that's one skill set when you learn, it can never be taken away from you. No,
Got that right.
you can have $100, man. You can turn that $100 to $10,000. Why? I've done it, right? And it's not because that it's a difficult thing to do. Now you're gonna have to learn and educate and take some losses because with any business, you're gonna take losses, but
That's
every
your
loss is a
tuition.
lesson. Yeah, exactly. You're paying tuition. You know, a lot of people spend hundreds of thousands of dollars to go to school and they recoup that cost. Sometimes you may spend couple thousands of dollars to learn how to trade, and it's okay because every loss is a lesson. But once you learn that skill set, like you said, it's one of those things where you forever have it and you will forever keep it. And it's kind of like recession proof once you learn it, because no matter what, you can go into the market and kind of make something for yourself without having not dealing with anybody. But I can say when it comes to being in the market, your worst enemy, unfortunately, is going to be yourself.
Oh yeah.